The financial world is on edge. Global markets are buzzing with anticipation and uncertainty, as investors and analysts alike try to make sense of the seismic shifts underway. Headlines flash across screens. BRICS Summit announces 2026 financial overhaul. And, is this the end of the dollar's reign? The sense of urgency is palpable, as the world's financial order faces its biggest challenge in decades. For generations, the world has relied on a single financial system built around the US dollar's power and stability. The dollar has been the backbone of international trade, trusted by governments and businesses everywhere. Now that foundation is being challenged by a bold new plan led by China and its BRICS partners set to launch in 2026. This initiative is not just a policy shift, it's a statement of intent to reshape the global financial landscape. Central bankers are holding emergency meetings, and investors are scrambling to understand the implications. The stakes are high, and the world's financial elite are watching every move, aware that the consequences could be far-reaching. This isn't just a market blip, it's a calculated move by a powerful bloc to create an alternative to the Western-led system. The BRICS coalition is determined to build a new framework that better serves their interests and those of the developing world. Many nations, especially in the developing world, have felt constrained by rules set by a small club of wealthy countries. They see this as a rare opportunity to break free from old limitations and have a greater say in global finance. The BRICS nations, Brazil, Russia, India, China, South Africa, and new members, now represent a huge share of the world's population and economic output. Together, they are forging a path toward a more multipolar financial system. Their 2026 master plan is a declaration of independence from the dollar-centric world. It's a bold step, signaling their readiness to challenge the status quo and assert their own economic sovereignty. It's about reshaping global power dynamics and challenging the idea that one currency should dominate international commerce. The implications reach far beyond finance, touching politics, trade, and even everyday life. As of December 3, 2025, the world stands on the brink of a new financial era. The countdown has begun, and anticipation is building as the launch date approaches. The old certainties are fading, replaced by a more complex, volatile landscape. Investors must adapt quickly, as the rules of the game are being rewritten in real time. The story of the 21st century economy is being written now, and the BRICS plan is a major new chapter. What happens next will shape the future for billions of people around the globe. The end game is in sight, and the world is watching, waiting to see how this unprecedented shift will redefine the global financial order for generations to come. Over the past decade, BRICS has evolved from a loose coalition into a powerful economic alliance with a clear and ambitious agenda. What began as a forum for emerging economies has now become a driving force in reshaping the global financial landscape. With the addition of new members like Saudi Arabia, the UAE, Iran, and Egypt, the bloc now controls a massive share of global energy resources and economic power. These countries bring not only oil and gas but also strategic trade routes and financial hubs, making BRICS a formidable player on the world stage. Their collective goal is to reduce dependence on the US dollar and Western financial institutions like SWIFT, which have long dominated international transactions and dictated the rules of global finance. At the heart of this movement is China, whose long-term vision and economic might are driving the ambitious 2026 plan. China is not just participating, it is leading the charge. The plan is to create a parallel financial ecosystem, new payment systems, innovative trade agreements, and development banks, all designed to operate outside Western influence and foster greater independence for member nations. The 2026 deadline marks the point when this new infrastructure is expected to be fully operational, signaling a major shift in the balance of global economic power. This includes cross-border payment systems that bypass SWIFT, independent credit rating agencies, and deeper financial ties among members, all supported by cutting-edge digital technology. For many BRICS nations, relying on the dollar has meant accepting political strings and vulnerability to US sanctions, which can disrupt economies and limit growth. The BRICS plan aims to neutralize that leverage, giving members true control over their own economic policies and the freedom to chart their own course. China is building the digital highways for a new world of trade, one that is centered on Beijing, not Washington, and powered by next-generation technology. Ultimately, this is about sovereignty and economic self-determination, allowing nations to make decisions that best serve their people. The 2026 plan is their bold declaration to the world. The rules of global finance are changing, and a new era is about to begin. The world now has a choice: continue with the old system, or embrace a new multipolar financial order led by BRICS. In recent years, many analysts and observers expected BRICS to announce the creation of a brand new shared currency, one that could rival the US dollar or the euro on the global stage. However, after much discussion and debate, that ambitious idea has been shelved for now, and is no longer on the immediate agenda. The reality is, creating a unified currency would require aligning the vastly different economies of BRICS members, and more importantly, surrendering significant monetary control. An almost impossible task for such a diverse group with unique national interests and priorities. Instead of starting from scratch, the bloc is now rallying behind the Chinese renminbi, or yuan, as a practical alternative. China, as the economic powerhouse of BRICS, already has a currency that is stable, widely used, and increasingly accepted in international trade and finance. Rather than reinventing the wheel, BRICS nations are leveraging China's existing financial infrastructure, which is robust and well-established. China has spent years building a network of currency swap lines and developing the cross-border interbank payment system, or CIPS, which serves as a direct alternative to the Western-dominated SWIFT system. By choosing to use the renminbi, BRICS members can bypass the US dollar and immediately plug into a system that's already operational and growing in influence. This move elevates the renminbi to the status of a global reserve currency, which has long been a strategic goal for China's leadership. It gives China greater global influence, while allowing its BRICS partners to avoid the rigidity and risks of forming a full monetary union. For other BRICS members, using the renminbi is a significant improvement over relying on the dollar, as it aligns them more closely with the world's leading manufacturing and export powerhouse. It also helps insulate their economies from US political risks, sanctions, and sudden policy changes that could disrupt trade or finance. Ultimately, this is a pragmatic, win-win strategy for the alliance, balancing ambition with practical realities. The renminbi is now the currency of choice for the new BRICS financial system, representing a major shift in global economic power. The BRICS bloc is moving forward quickly, adapting to the future without the need to reinvent the wheel. A currency's strength comes from the economy behind it, and China's is formidable. China is the world's workshop, producing everything from smartphones to high-speed trains. Trading with China means access to real, tangible goods, giving the renminbi intrinsic value. Unlike economies reliant on financial services or debt, China's currency is backed by factories, infrastructure, and a massive workforce. Holding renminbi is a claim on the output of the world's largest manufacturing economy. For developing countries, this means they can use renminbi loans to buy equipment and materials directly from China. This creates a closed-loop system, efficient and self-reinforcing. China isn't trying to beat the dollar at its own game. It's changing the game. The most valuable currencies in the 21st century will be those tied to real economic activity. As more countries seek to industrialize, they're drawn to China and the renminbi. The connection between currency and production is China's ultimate leverage. The renminbi's appeal is only growing. For 80 years, the US dollar has been the world's financial anchor. Most global trade and central bank reserves are in dollars, giving the US enormous privilege and power. But China isn't just swapping the dollar for the renminbi, it's proposing a new model. The Chinese system is built on direct, bilateral trade and development, not privilege. China encourages the use of local currencies for trade, using the renminbi mainly for transactions involving China. This decentralized approach respects partners' sovereignty. Western loans often come with conditions. China's model focuses on infrastructure and development, with fewer strings attached. For many developing nations, this is more appealing. Critics warn of debt risks and Chinese influence, but many see tangible benefits over the old system. The choice: a unipolar dollar system, or a multipolar world centered on real production and a basket of currencies. The renminbi is leading the way in this new era. The global financial landscape is shifting. The new system isn't just theory, it's happening now. Kenya, like many African nations, once borrowed in US dollars, exposing itself to currency risk and budget strain. Now Kenya is borrowing in renminbi to pay directly for Chinese imports, eliminating exchange rate risk. This creates a stable, predictable financial situation and a virtuous cycle of trade and development. Kenya's president has urged traders to use local currencies, and the country can repay loans by exporting to China. This model is spreading across Africa, Asia, and Latin America. Argentina uses a currency swap with China to pay for imports in renminbi, preserving its dollar reserves. Saudi Arabia is considering selling oil to China in renminbi. Each move is another brick in the new financial system China is building. It's a quiet revolution, driven by practical business decisions. The shift is real, and it's accelerating. The world is adapting, one deal at a time. For the Global South, the BRICS 2026 plan is more than a financial alternative. It's a new hope for development. For decades, these nations have been trapped by dollar-denominated debt and currency volatility. The renminbi-based system offers a way out, with loans tied to real infrastructure and industry. China's own development story is a powerful example, focused on long-term investment and mutual benefit. This model gives developing countries more stability and a stronger voice on the world stage. The Global South is becoming an active partner in a new economic bloc. The BRICS plan is an invitation to shared prosperity, not dependency. The 2026 or 26 the master plan's goal is to internationalize the renminbi. China wants its currency used in global trade, finance, and as a reserve asset. The renminbi's share of global trade is rising fast, and in 2023, it surpassed the dollar in China's own cross-border transactions. The expanded BRICS bloc, with energy giants like Saudi Arabia, accelerates this trend. There's serious talk of pricing oil in renminbi, a potential game-changer. China's Belt and Road Initiative is embedding the renminbi in economies worldwide, with infrastructure projects financed and paid for in Chinese currency. Each new project is another node in the renminbi's global network. The dollar's monopoly is eroding, replaced by a multi-currency system. By 2026, the infrastructure for this new order will be in place. The renminbi's rise is steady and strategic. China is playing the long game, and winning. The world is moving toward a new financial balance. In times of financial upheaval, investors seek safety in real assets. Gold and silver have always been trusted stores of value, immune to central bank policies. As the world shifts to a multipolar currency system, interest in hard assets is surging. Silver, the money of the people, is also a critical industrial metal, essential for solar panels, electronics, and green technology. China, as a manufacturing powerhouse, is a massive consumer of silver. As the renminbi system grows and green infrastructure expands, silver demand will soar. BRICS nations are diversifying into real assets, not just currencies. In a world where the definition of money is changing, owning something tangible may be the wisest move of all.